So I don't usually comment on financial news and current affairs, inflation or any of that stuff, but the CPI data came out today, and I've had a lot of conversations with people over the last couple of days about what they think is happening in the first quarter of 2022. And I can tell you what I'm dealing with. If you don't know, I own a hotel in Lincoln, Nebraska, and I'm having some supply chain issues. And that kind of plays into this entire chaotic mess of what I think March is going to end up being. This is just a real quick dive into why March is going to be madness, why I think it's going to be a really interesting time to invest. If you like this stuff, leave a comment down below. If I said stuff way too chaotically, let me know. Leave a like and please subscribe to the channel. If you're not an active investor and maybe you stumble upon this channel or you watch this because you like to see the renovation of my main hotel, I'm just going to break down some key things for you. CPI just means Consumer Price Index. And basically what it's showing is how much a basket of goods is each year and if it's going up or going down in real dollars. So it was our way of gauging inflation. If you don't know what inflation is, it's how much of a certain good your money can actually still buy. I'm sure you're hearing this buzzword going around a lot, inflation, inflation, inflation. The reason why a lot of us that are focused on the couple of dollars you can make extra from an investment care about inflation is if inflation's high, that's great for people like me that invest in those large properties because it means that I'm repaying that debt with cheaper money. The debt stays the same and I'm continuing to pay that down. So normally that's a great thing for investors that leverage debt. For savers, for people that put their money in a savings account, or they're just trying to get from day to day, inflation's really bad because it means you're probably still getting paid 15 bucks an hour, but the cheeseburger now costs $2 instead of $1. You notice the thumbnail of my video was the Ides of March. If you don't know the history of what the Ides of March are, it's the 74th day back in the old Roman Empire, I should say the Roman Republic. It was the 74th day of their calendar where they had to settle up on all their debts. And the irony here is Julius Caesar actually died on the 15th of March, the Ide of March. Irony being that he had to pay for his debts. It also marks the point where Rome no longer was a republic and then became an empire. Why is that important to us? We're entering a very interesting point in history of America, right?
So if you look at the orange line, I centered it out, assuming inflation stays the same, does not continue to trend upwards in 2022. We can see that we're already facing a significant amount of inflation compared to previous years. This point isn't missed by Jerome Powell. In January, he was explicit that with inflation high and for now and apparently getting worse, the Fed this year plans to steadily clamp down on credit and end the extraordinary support it has provided to the U.S. economy during the pandemic. So it's important to us because if we're seeing 10% inflation, we have to price that into the cost of what we're selling, especially if we're doing it on contract of 1 or 2 years. If we're getting 10% inflation, that means that if we're charging rent, let's say $100 a month for rent, it's going to be $110 at the end of the year. If we're losing that throughout the year, how do we plan for that? I think it could be a really interesting year.
Jerome Powell finally admitted that we have inflation coming. And he finally admitted that we need to do something to curb that inflation. And with today's numbers, it has just doubled down the fact that they're going to raise interest rates. We're already planning on doing it 4 times in 2022, which again, if it costs me more to borrow money, it means that I'm less likely to buy more properties. It means it's less likely that banks are willing to lend. It just changes the entire map. Now, if you're in the hotel world, you know that there's March Madness. Bars, we love it. There's always games going on. There's always things coming back and forth, and people are spending money like crazy in March. It's a chaotic but very profitable part of the year. This year might not be as great as normal though, because all the people that were on unemployment for various reasons through the pandemic and chaoticness that came from that, some of them may not have said take out taxes. That money is still taxable. Others might actually end up owing taxes. So what usually lights the fire of March Madness, this large amount of money coming into the economy, this large amount of money coming into Lincoln, Nebraska, might not be there. We might not have that catalyst. So people that normally would be getting a $10,000 tax refund might find that they're only getting $1,000. They might owe money.
Now, I might be completely wrong about this, okay? It might not be this bad. Just something to think about.
Combine that with the supply chain shortages that we're all dealing with. I'm personally waiting on sheets, which is interesting. I'm having this issue, can't find sheets or lamps. And I never thought that I would care as much about sheets or lamps. I found a company that's able to take care of my hotel. He doesn't have any sheets right now. At the same time, I'm having problems getting lamps because the people that make the lamps are overseas, and trying to get it here, the cost of shipping is it's costing more than the lamps. So it doesn't make sense for me to go and spend $10,000. This is not even a joke. $10,000 on lamps. I'm gonna have to if I'm gonna open. But even if I'm willing to pay the $10,000 for lamps because of this inflated cost of moving stuff into the United States and then moving it from the coast to the middle of Nebraska, now I have to deal with, can they actually get it to me? And that supply chain issue is not limited to just me.
So the March Madness, the debts coming due, the supply chain issues, the rise of inflation, it's all going to make for a very interesting first quarter of 2022. As investors, we enjoy the easy money. As savers, we worry about the parabolic inflation and if we continue to charge enough to stay in business. And as observers, we must wonder if this is all part of a bigger plan. Just wondering, how can we look at continuously tripled inflation numbers and not question why it's being allowed to happen? If you got value from this video, please leave a like and subscribe, and please share your thoughts in the comment section below. How are you investing in 2022?
I like talking about financial stuff, financial news, financial current affairs, financial investing in something or other. I think I've gotten a little bit bored of my never-ending hotel project. So I might start doing more videos like this. We'll see.